Happy New Year, everyone. Welcome to 2025, and welcome to another deep dive. Today, we're going to be looking at the PAI Morning Briefing from January 2nd. And we're going to try to give you like a personalized financial briefing, almost like having your own AI market analyst. So let's get right into it. What do you say? Let's crack this open, see what's shaking in the markets.
Yeah, sounds good. Well, I think the major indexes. The S&P 500, Dow Jones, Russell 2000, all dipped slightly on January 1st to start the year. But the Nasdaq's down over 1.2%, and that's really raising some eyebrows. Tech seems to be feeling a little pressure.
So not exactly a champagne toast to start the year for tech investors. What's behind this dip, especially for the Nasdaq?
It's really a mix of factors. The Nasdaq is, packed with tech companies, and they're particularly sensitive to changes in interest rates, inflation expectations, and even just like the overall economic mood, any whiff of uncertainty. And investors tend to pull back a bit.
Makes sense. Speaking of uncertainty, it seems like crypto just loves to keep us guessing. Bitcoin is up over 2.4%, hitting $96,715. With Ethereum close behind at a 3.6% jump to $3,475. Are you at all surprised by this continued resilience in crypto, especially given all the broader market jitters?
I think what's fascinating here is this resilience. It might indicate like a shift in how investors are viewing crypto. Is it becoming like a safe haven asset, like gold in times of uncertainty? Or are we due for a correction? It's a question worth pondering, the growing interest.
From both like institutional and retail investors, definitely fueling this momentum.
Right. It's like people are looking for alternative places to park their money when the traditional markets get a little rocky. Now let's shift gears a little bit to oil prices, which seem to be on an upward trajectory. Yeah, and the anticipation around potential stimulus measures from China is a key factor here. China is the world's largest crude importer, so any sign of increased economic activity there sends ripples through that global energy market. This suggests that investors are betting on China's economic recovery, which could be a positive sign for global growth.
So China's actions have a big impact, even on something as seemingly unrelated as my gas bill. It really highlights how interconnected these global markets are.
Absolutely. One country's economic policies can create a ripple effect that's felt worldwide. Now, shifting back to the Nasdaq again, the Nasdaq 100 E-mini futures are telling kind of a different story than the recent dip in the broader Nasdaq.
It seems like the markets can't quite make up their mind. So what are these futures telling us? And what should we be watching for?
Well, futures contracts are essentially bets on where the market's headed. And the Nasdaq 100 E-mini futures are currently trading at 21,474, which indicates a bullish trend, despite the broader Nasdaq's recent dip. So this suggests that some investors believe the tech sector's downturn is temporary, and they're kind of positioning themselves for a rebound.
So it's almost like two different camps with two very different outlooks. What's a key indicator to watch for to see who might be right?
I think a key price level to watch here is 21,438. If that upward momentum continues past that point, it could signal a significant shift in sentiment toward the tech sector.
Interesting. So while some are hitting the brakes, others are already revving their engines for a tech comeback. Now zooming out to the S&P 500, it's had an incredible run. With 2 consecutive years of over 20% gains, that's impressive.
Yeah, it is. But historically, 3 consecutive years of such high gains are rare. So while the current momentum is positive, it's crucial to approach this with a dose of cautious optimism. The big question is, can the S&P 500 defy historical trends?
That's the million-dollar question, isn't it? What factors could contribute to continued growth or potentially derail it?
Well, there are many factors at play, including inflation, interest rates, corporate earnings, and even geopolitical events. For example, U.S. Treasury yields are currently hovering near 7-month highs, even with a recent slight dip. And this is significant because those yields directly impact borrowing costs for businesses and consumers.
And those borrowing costs can trickle down and affect things like mortgage rates and consumer spending. It's all connected. Now let's move on to some corporate news. Ryan just shelled out a cool 700 million Canadian dollars for Altus Group's property tax services business.
That's a strategic move. Ryan is clearly positioning itself for growth in the property tax services market. And this acquisition is likely to boost their service offerings and expand their reach, potentially making them a dominant player in the industry.
So they're putting their money where their mouth is. Meanwhile, Unity Software stock is rallying. And some are pointing to a meme by Roaring Kitty, who you might remember from the GameStop saga, as a potential catalyst. What do you make of this?
Well, It's hard to say with certainty whether a meme directly influenced the stocks movement, but it does highlight the increasing influence of social media on market trends. It raises important questions about how we navigate this new landscape, where online communities can potentially sway financial decisions.
The whole new ballgame. But let's not forget about the tariffs on Chinese imports from the former President Trump era, which are still in effect.
Right. These tariffs have been a point of contention, and their future remains uncertain. They've already impacted global supply chains and led to job losses in the U.S., and there's concern that if relations with Asian allies don't improve, we could see further negative consequences.
So it's a complex geopolitical situation with significant economic consequences that we need to keep an eye on.
Absolutely. It's a balancing act between protecting domestic industries and fostering healthy international trade relationships. There are no easy answers.
Okay, before we wrap up this section, a few quick hits. Bill Ackman is making waves with Pershing Square Holdings, with plans approved by Euronext Amsterdam that could shake up his investment strategy. And CAS Information Systems acquired the Acuata platform. From Acutive Solutions, what's the bigger picture here?
Well, we're seeing a trend towards consolidation in the financial services sector, fueled by the need for better technology. Companies are merging and acquiring to stay competitive in a rapidly evolving digital landscape.
Like a high-stakes game of chess, with everyone trying to make the right moves to stay ahead. Speaking of staying ahead, sector analysis suggests technology is still king, driving market sentiment and innovation.
Absolutely. And with rising oil prices, the energy sector is looking increasingly attractive. Plus, as we saw with the CAS Information Systems acquisition, the finance sector is heavily focused on integrating technology to streamline operations and improve customer experiences.
So if we connect these dots, it seems like technology is the common thread, weaving through multiple sectors and shaping the future of the global economy.
Precisely. And speaking of the global economy, it's crucial to remember how interconnected it all is. U.S. economic policy, Chinese market dynamics, European financial strategies, they all play a part in shaping that global landscape.
That's like a giant, intricate web
where
everything is connected, and one small tug can send vibrations throughout the entire system. So as investors, we need to be mindful of these global interactions as they present both opportunities and risks.
Exactly. It's a constant dance of evaluating global trends and understanding how they might impact your own investment strategy.
It's a lot to take in, but that's what makes the market so fascinating. So now that we've covered a lot of ground, is there anything that stands out to you as particularly significant for investors right now?
You know, I think the overarching theme here is one of cautious optimism. We're seeing signs of both growth and uncertainty. On one hand, we have the continued resilience of the crypto market and the potential for a tech rebound. But on the other hand, we have rising oil prices, lingering trade tensions, and the historical rarity of the S&P 500's recent performance.
So it's like navigating a ship through both calm waters and choppy seas. What advice would you give to someone trying to chart their course through these market conditions?
Well, diversification is key. Spreading your investments across different asset classes can help mitigate risk and potentially enhance returns. It's also crucial to stay informed, conduct thorough research, and align your investments with your long-term financial goals.
That's great advice. It's like building a well-balanced meal. You don't want to put all your eggs in one basket or your portfolio in one sector. Now let's dive into some specific sectors that are catching your eye. We've talked about technology and energy, but what else is on your radar?
The financial services sector is undergoing a significant transformation. As we saw with the CAS Information Systems acquisition, companies are aggressively pursuing technological integration to streamline operations and improve customer experiences. And this trend is likely to continue as the industry strives to stay ahead of that digital curve.
So it's not just about offering traditional banking services anymore. It's about embracing technology to create a more seamless and personalized experience for customers. What other sectors do you see being significantly impacted by technology in the coming year?
Healthcare is another industry ripe for disruption. Telemedicine, artificial intelligence, and data analytics are changing the way healthcare is delivered and accessed. We're also seeing exciting advancements in biotechnology and pharmaceuticals with the potential to revolutionize disease treatment and prevention.
It sounds like there are some exciting opportunities for investors who are willing to do their homework and embrace innovation. But with all this talk of technology, it's easy to get caught up in the hype. What are some things investors should be cautious of?
Well, it's important to distinguish between genuine innovation and mere hype. Not every new technology or startup is going to be a winner. Thorough due diligence, including understanding a company's financials, management team, and competitive landscape is essential before making any investment decisions.
So it's like being a detective. You need to gather all the evidence before drawing any conclusions.
Yeah.
Now let's shift gears and talk about global markets. We touched on China's potential economic recovery and the ongoing trade tensions. What are some other key global factors that investors should be paying attention to?
Well, the European Union's economic policies and stability are always important to monitor. Brexit continues to have ripple effects, and the bloc's ability to navigate economic challenges and maintain unity will be crucial for global stability. We also need to keep an eye on emerging markets, which offer both potential growth and inherent risks.
It's like a global chessboard, with each region making moves that can impact the overall game. So how can investors effectively navigate this complex global landscape?
Well, staying informed about global news and economic trends is essential. It's also wise to consider diversifying geographically. By investing in companies operating in different regions of the world, this can help spread risk and potentially capture growth opportunities in various markets.
So it's about thinking globally but acting strategically. Now with so much information swirling around, it can be overwhelming to stay on top of it all. What are some resources or strategies you recommend for investors who want to stay informed without getting lost in the noise?
Subscribing to reputable financial publications and newsletters, attending industry conferences, and following insightful financial analysts and experts on social media can be helpful. It's important to filter information critically and avoid getting caught up in market hype or sensationalism.
So it's about curating your own personalized financial news feed and being discerning about the information you consume. What are some other tips for cutting through the clutter and making sense of the market's noise?
I think focusing on long-term trends rather than short-term fluctuations can be helpful. Remember, investing is a marathon, not a sprint. It's also crucial to have a well-defined investment strategy and stick to it, even during periods of market volatility.
That's a great point. It's like having a roadmap to guide you through the twists and turns of the market. Now with 2025 just getting started, what are some key themes or trends you'll be watching closely in the months ahead?
Well, I'll be paying close attention to the continued evolution of artificial intelligence and its impact across various sectors, from finance to healthcare to manufacturing. I'll also be monitoring the development of sustainable investing and its potential to drive positive change while generating financial returns.
Those are certainly areas to keep an eye on, and I'm sure our listeners are eager to hear your perspective as these trends unfold. Now, before we wrap up our deep dive today, I want to ask you a question that I think is on the minds of many investors. What is one piece of advice you would give to someone who is just starting their investing journey?
I would say, start small, be patient, and don't be afraid to ask for help. There are many resources available to new investors, and it's never too early to begin building a foundation for financial security.
That's great advice. It's about taking those first steps and then building momentum over time. It's been a fascinating deep dive into the PAI Morning Briefing for January 2nd. We've covered a lot of ground, from market trends and economic indicators to specific sectors and global factors. As we wrap things up, is there anything you'd like to leave our listeners with? Perhaps a final thought to ponder as they navigate the year ahead?
I think the most important thing is to remember that investing is a journey, not a destination. It's about making informed decisions, staying adaptable, and learning from both successes and setbacks. As we've discussed, there are always opportunities and challenges in the market, and the key is to approach them with a balanced perspective and a long-term vision.
That's a great way to put it. It's about staying curious, staying informed, and staying engaged with the ever-evolving world of finance. And remember, you don't have to go it alone. There are resources and experts available to help guide you along the way. So here's to a prosperous and informed 2025.
Cheers to that.
And that concludes our deep dive for today. We hope you've enjoyed this exploration of the market and feel empowered to make informed decisions in the year ahead. We'll be back soon with another deep dive into the world of finance. Until then, happy investing.